string of other interesting businesses that I wanted to get into. So I wanted to have some kind of like start off with a market review, and then we're going to get into some earnings, and I'll do some reviews of companies as well as their valuations, let you know where I think the price target for me is and what I think that particular stock looks like from a buy, hold, or sell perspective. And I would love to see some suggestions on your side. Is there a stock you want to look at? Is there a question you have? Put it in the chat. Let's mix it up, and I will look at the chat, either respond or do an analysis on a stock that you're looking to get reviewed. And I appreciate you joining. It looks like we've got some people already on the stream. I appreciate you joining. So today was a red day across the board. We had the NASDAQ down 0.5, S&P down 0.47, the Dow down, and the Russell down. Not too bad, but it was not good. And it was, again, a day where some sectors got hit harder than others, and I'll go through that in a bit. There were a couple highlights. Our friends over at Meta held their stock price today, just up slightly. And then in the after hours, they're up a little bit. So these guys did all right. So good to see Meta's hanging in there. When we look at the market, it's been an interesting week for sure, where you've seen some stocks like Nvidia selling off quite a bit, like down 4%. And I don't think I need to remind anybody that this stock was down 17% at the beginning of the week. So it's volatility, baby, with Nvidia. And I think there's a lot of scared investors in that stock that are quick to get out. And Rotella Cheese, thank you for joining. Lamb Research, that's on the list. And I agree that the earnings look good. Let's take a look at it. So back to Nvidia. Nvidia is just, man, it is going to be interesting what happens there. Of course, the research, the report on DeepSeek and how DeepSeek has really reduced the cost of AI, large language models, as well as the next thing that you do with the large language model. And that is going to be a big story because, immediately a lot of people were like, oh, it's made up. It's not real. What DeepSeek is it's open source, and they provided their model to people here in the States, and people in the Silicon Valley looked at it and they were really impressed. They thought, man, these guys nailed it. And now you're hearing OpenAI is claiming, oh, they stole our technology or something. And that's always, I don't know, it could be true, but I think it sounds a little bit like a nice solid excuse. Hey, wait, they can't be better than us. They stole our idea. Well, if they stole your idea, how come your models weren't as affordable and expensive and don't run with the same energy and so forth? But the whole story is beginning to become a big problem for Nvidia and all the stocks that were just priced up because we were going to have to build out these data centers that were just going to be huge. But with this new, more efficient AI path, they don't have to be huge. They don't consume as much electricity. And that was validated by some smart people in the United States that really know their stuff. I've done enough to be comfortable saying that. I've done enough research and listened to some experts. And don't take it from me. Go do your own research and you'll see that, DeepSeek is the real deal. To make matters more interesting, Alibaba, which I believe is a credible company, they came out and said, we have an AI model and it's even better than DeepSeek. Oh, great. Here we go again. So Nvidia has a couple of big stories that they're going to have to contend with. And we're going to talk about Microsoft in a bit. They were down 1%, and it's not a pretty picture in the after hours. And I'll cover that in a bit. So the semiconductor space was not good because Nvidia went down. The software space was also down quite a bit. Salesforce is down. ServiceNow is down. We'll take a look at that. And I am going to look at ServiceNow because they announced after the market closed. Apple's been holding their own. They're like, man, these guys dodge bullets. They dodged the big pullback here. So I'm not going to look at Apple today. I'll look at it tomorrow. They're going to announce tomorrow. So I'll save that till tomorrow. IBM had a very good earnings, and I believe they're rallying, or they rallied today. The other sectors, it's kind of a mixed, green and red. And financial services, nothing really big to point out. Tesla was down today. We'll take a look at the stock. They announced. Healthcare was down today. Nothing really to point at and say, hey, here's a big winner. So really the news today was was a down day. Nvidia took the brunt of the sell-off. Tesla was sold off quite a bit. So it'll be interesting to see how those stocks will respond. As we look at the sectors, communication services, both Google and Meta were slightly positive. And some other stocks held their own. Like I think T-Mobile did really well. I think they had a good earnings. So that helped that sector. Energy stayed in the green. Material stayed in the green. Staples stayed in the green. And utility stayed in the green. But everything else was in the red. Real estate being the biggest loser sector of the day. So that is interesting. Looking at the scoreboard for the year, who is leading the race to be the best sector of the year? It looks like communication services is number one. Financial services is number two. Healthcare is number three. Technology at the back of the pack. That is rare to see. But here we are. We're 2 trading days from finishing off January. Carlos, good to see you. Wrote, Shadow Guy. I sold a 2-week put on Nvidia at 105. Going to be biting my nails. So it's interesting you did that. I bought a long-term put on Nvidia that expires in January of 26. I'm already in the money. I'm up like 35% in the money. So I don't know when I should sell it. I'm not a big, options guy. But man, if you want to play with fire, play with Nvidia, short it or buy an option, and it'll add excitement to your life for sure. All right, good luck with that, Shadow Guy. Hopefully we both can make money. All right, so looking at the list of the most expensive, most valuable companies, Apple holding up their value, incredible. Those guys dodge bullets. That they have like 10 lives, man. Just nothing. These bad stories did not stick to Apple because they didn't build a large language model. They didn't invest big in AI. So they avoided all the heartache, the carnage that Nvidia is having to deal with, and Microsoft is beginning to deal with. Microsoft was down. Nvidia was down. Amazon was down a bit. Google held their value. Meta held their value. Tesla was down. So there was some pretty good red out there, but nothing. I mean, the worst one was Nvidia. And Nvidia's in correction territory, and I think the volatility is here to stay. I think the Nvidia stockholders yesterday, when the stock did bounce back up and picked up maybe, let's say about half of the losses that it lost on Monday, they were claiming a little bit of a victory, like, oh, okay, it's back. Now today it's got to be demoralizing. Oh no, it's back down. And, the stories are coming out that, hey, the AI that we thought was going to work 2 years ago, innovation will continue to make products better, in many cases cheaper, commoditized, good old-fashioned competition, good old-fashioned innovation. Companies get disrupted. And it looks like there is some disruption happening with OpenAI and potentially Nvidia. If we don't need those big expensive chips, there you go. Don't need them anymore. Good luck selling them, Nvidia. Good luck selling them at those premiums that you wanted. And we will see. Nvidia doesn't report for a while, so we'll see what the hyperscalers say. And we're going to get into one of the biggest ones, which is Microsoft, in a few minutes. And Shadow Guy. Yeah, I know you and I are going to talk one-on-one. I wanted to talk about it and see if you had any advice for me. But we'll go over that when we talk. All right. So Rotel and Cheese, can you see hyperscalers cutting back on their GPU CapEx? Yes, absolutely. Totally. Now, so here's what happened in 1 week. Last week, hyperscalers were bragging, I'm going to spend a lot of money on CapEx. I'm going to spend so much money. I'm going to outspend everyone to be the biggest, the most sophisticated, most capable data center company on the planet. That's what they were like pounding their chest about. They had that $300 billion joint venture announced. You had even Microsoft said we have $80 billion we want to spend. Meta was saying, oh yeah, we're going to spend, I forgot how many tens of millions, billions, excuse me. And the story this week is, yeah, you can do that all you want, but you'd be crazy because now the game has changed. Yeah, AI, as it gets built out and so forth, it'll continue to get developed and evolved. And now you can do it at a fraction of the cost. The startups are going to start building on top of DeepSeek or anything that resembles that model in cost structure, because the costs are substantially lower from a power consumption perspective. Overall, just less expensive. So it's a little bit of OpenAI is painted in a really bad spot. Data centers will not need to be as big. And it looks like China is pretty darn competitive. So if these hyperscalers are building out data centers in China, that'd be a pretty good idea. But I would say that there's probably some capacity that was planned that is going to be canceled. And there's going to be a slowing down of the excitement to invest into AI, I imagine. So the short answer is yes. I think the hyperscalers have to throttle back. The rules may have changed. And again, the sources that have reviewed DeepSeek, these are very credible sources. Don't believe me, do your own research. But the sources I'm reading, these are the people that know AI. It's not some stock analyst that would love just to see Nvidia continue to rise or fall, in my case. Go seek out the people that really know and listen to them. I can't explain it. It's freaking rocket science. And I'm not a rocket scientist. All right. So looks like Alex is on. Good to see you. Neil, I haven't seen you in a while, Neil. What's up, man? So yeah, it is a crazy market. Showing off. Yup. Microsoft. So looks like Rotel and Cheese, you got a couple comments there. I'll make sure that I don't see any stock symbols yet. So if there's a stock symbol or a question. Okay, Alex, will AMD be the beneficiary of Nvidia news? Surprisingly, AMD is completely like not rallying. There's been so much excitement and AMD is just completely a stick in the mud. So the answer is no. And I've evaluated AMD. I don't like the stock. They don't produce enough cash flow. And they're not a shaker and a mover, man. The company that's going to be the force that Nvidia and other chip makers are going to have to contend with is Huawei in China, because they're the ones that have been producing chips that the AI hyperscalers are using Huawei chips, which I don't think any Huawei product is allowed in the US. So there you have it, folks. Okay, so we're going to get into Microsoft, and the story is not pretty. This is going to be concerning. So let me start with things I didn't like. So our friends at Microsoft, once you get to their free cash flow dropped substantially. They announced their fiscal year. They just finished their second quarter of their current fiscal year. And when we look at their cash flow on an annual basis, it dropped, the free cash flow dropped by $10 billion. And that's a big drop. And it really lowered my valuation, and it caused me to be concerned. I raised my discount rate because now Microsoft has a threat. It's called DeepSeek. It's called Alibaba. It's called a better way of doing it. It's called you've been investing in a company, in OpenAI, and maybe in a method that will be deemed to be non-competitive or less competitive or less capable. And you have a new competitive force, which is lower cost AI. So when I bring all that together, just the lowering of cash flow was the biggest hit. They grew their revenues. Nicely done, Microsoft. The earnings per share was decent. Nicely done. But I think they're over investing right now. And if you recall, when Meta was over investing in the metaverse, their cash flow started to go down, and they got hammered by the market. So the market's selling off Microsoft in the after hours. I think it's priced 21% too high. And I did a short earlier today. I had a chance to think about it further, and I've decided I'm going to sell all my Microsoft shares tomorrow. I think I'm in at about 15 grand. I was hoping to build it up, I don't know, to 50 to 100 grand. But the quarter is that concerning. I read through the earnings report, and in there, I mean, just it's crazy how quickly things changed in 1 week. A week ago is about who can build it faster, who can spend the fastest, who has the wherewithal to build this thing out. And in 1 week, the whole mindset has changed where, okay, all that investment is now a big risk item. If you're over investing, you're burning money, you're burning cash. And if you overinvest and you have all this capacity that goes unused, that's a big no-no. So I'm going to sell my shares of Microsoft tomorrow, and I'll wait a quarter or two to see what's going to happen with this stock. I'm up on the stock 3%. So if it goes down 4%, I'm probably going to lose 1% on the shares. And that's that. It was, I think it looked okay, but then I saw the earnings. I'm seeing the writing on the wall that DeepSeek is coming in and changing the game. So I'm out of Microsoft. And so Shadow Guy, the Fed had comments, but their comments were like, I was actually having lunch with my wife. She goes, "Hey, didn't the Fed talk?" And I said, "Yeah." And they're basically holding rates the same. They see that inflation is kind of still a lingering problem, but they didn't really affect the market. What's been affecting the market is DeepSeek and Alibaba news that they've got their AI. That has just really kind of stolen the magic out of the AI stories. OpenAI has been somewhat muted. They don't know what to say. They're like, they're pretty quiet. They're like, we don't know what to say. You can do it for like 5% of what we have to spend. That's a big problem. Now I'm hearing rumors that they're beginning to spread the rumor that, they stole our technology. Really? Well, if you had that technology, why didn't you release it? Which is, it would have been far less expensive, easier to use, all those things. Startups could start using it. So I think it's a little bit of kind of a little bit of a circus going on. And we'll see how that plays out. So back to the Fed. The Fed didn't really, in my opinion, didn't have any movement. It's like boring weeks when there's nothing going on and the Fed's the only thing that's going on. They tend to kind of move the market a little bit, but these fundamental stories are what's moving the market, in my opinion. All right. So we covered Microsoft. Microsoft gets a D- on their report card for the quarter. Not looking good. And There we go. I didn't have to pay much. I'm probably going to lose 1% on my investment in Microsoft, but I live to fight another day. My portfolio is doing great in January. The volatility that we've seen is pretty darn stimulating. And when we look at these um, heat maps and you see bright red and green and lots of green and lots of red, it's a really interesting week. We've seen this the whole week. And luckily, I've been in some stocks like Meta that have held my portfolio in really good shape. Also, some software companies like DocuSign, even Zscaler did really well. My portfolio is doing really well in January, knock on wood. Healthcare has been showing up. So, good to be diversified. Really good to be diversified. Okay, so Microsoft, we got to put you on timeout. Very poor earnings. Now let's talk about our A student. Sits at the front of the class, does their homework, doesn't talk back to the teacher, and that is Meta Platforms. They are up 71% in the 1 year, 210% over the 5 year. And these guys just keep rolling, up 2.29% in the after hours. There's a lot that I like that Meta announced. Starting with, they're already a huge company and they grew their revenue by 22%. Top line revenue, 22%. Whew, beautiful. What's even more impressive is they grew their net income by 59%. Man, incredible. And they're a huge company. This is the trailing 12 months, doesn't include the quarter they just closed, but 22% on a $156 billion run rate. We're talking about $35 billion of growth. It's massive. And their net income grew 59%. Free cash flow expanded substantially while they spent more money, more CapEx money. That's how much cash they were producing. They can spend more in their data center and expand cash flow beyond my expectations. And my price target on Meta went up because, I mean, that was just impressive. So impressive. So I updated my evaluation of Meta, and I still see a 34% discount because their cash flows are really strong and their earnings per share is solid. Now, all these stories of DeepSeek and Alibaba AI, are they a threat to Meta? No. They can use DeepSeek, they can use Llama, they can use whatever. Whatever works, they want it because they want to put it into their business so that they can operate more efficiently and expand their net income even more. So Meta was the stock that really is in a really good spot, similar to Apple. When we look at Meta for the year to date, it's the number one stock in the Magnificent Seven year to date. It's at 15%, soon to be, I guess, 17, 18% year to date. And this is a very large cap stock at $1.7 trillion. So Meta, nicely done. Strategically, they're in a great spot. They keep growing. AI is going to be an opportunity for them. They invested big, but they can afford it. I mean, everything's falling into place for these guys. So Meta is, I own a lot of Meta. I'm not buying any more shares because I own a lot of it. But most definitely, I see that the price target I have on the stock is a little over 900. So this stock is, I think, really set up well for 2025. Go Meta. Nicely done. Bad Omen, good to see you. How are you, man? And let's keep rolling here. And the next stock I'm going to go over is Lam Research. So Lam Research is a stock that we found together, and I should say somebody else from the community brought this stock. We reviewed it. I really liked it. We reviewed it against the other semiconductor materials and machinery companies like ASML. This one just looked really good. Fundamentals looked really, really good. They've been growing their revenue. If you look at the quarterly, 19.7%. In the most recent quarter, they grew at, I guess for the year, I should say, for the current quarter or the two combined quarters, they grew at 15%. Very nice growth rate, profitable, free cash flow was good. So I updated my evaluation of Lam Research, and I still have a nice discount on the stock. And this stock is moving in the after hours, they announced, so it's up 3.13%. ASML announced in the before the market opened, it traded up because they had a good earnings announcement as well. So the volumes of chips, they're getting manufactured, and that's really good. So Lam Research and ASML are working. And I think that, both stocks had seen pretty good drop offs from their highs. So they provided a nice opportunity to buy these stocks. I thought Lam Research was a little better than ASML. So I went with this one. And so far, so good. So this one's working. They had a good earnings. And I updated my evaluation right before we got started. And I still have about a 29% discount on these guys. So I'm going to keep buying Lam Research. I'd like to build I don't know, $15,000, $20,000 position and go from there. I think it's a good company, good fundamentals. The demand is out there. They're guiding really well. So overall, Lam Research, a really good, solid addition to my portfolio. We will sell Microsoft. We'll keep buying all these other companies that are getting it done, like Lam Research. Analysts think this stock is discounted by 25%. I said 29%. That's fine. It's good to see that I'm aligning with some of these analysts. I do my own research and I do my own analysis, but there's nothing wrong with the analyst and I agreeing. It actually makes me feel a little more confident in the stock. So that was Lam Research. Nicely done, Lam Research. Nicely done. All right, let me go through these comments, make sure that I'm not missing anything. Good to see you, Neil. So Rotel and Cheese. If AI-related CapEx goes down, LRCX will suffer. Not all chips are for AI. A lot of chips go into cars, and they go into laptops, and they go into refrigerators, and they go into many different products. So the AI chips are the most expensive ones, but they all need the machinery that Lam Research and the materials that Lam Research sells, as well as ASML. And they're both seeing good demand for their products. So keep that in mind, that AI is not the only destination of chips. Chips are going into everything, right? iPhones, Android phones, TVs, computers, all these products, refrigerators, appliances. We got a new car in November. The thing is like a rolling supercomputer, voice activated everything. Well, all those things are chips, and those are chips that have been developed over time. They're not AI chips. They're just chips that do a particular function. And that's where you need Lam Research equipment as well as ASML. All right. So looks like I've got all the messages, or at least I didn't miss any symbols. So that's good. We covered Microsoft. And let's see here. Brian McLovin. What is your price target on ELV stock for 2025? And when you say ELV, we're talking about Elevance. And I'm optimistic that healthcare is going to do it this year, man. They're coming back. This stock's been working okay for the year, for the month of January. And my price target, these guys are going to announce, no, they already announced on January 23rd. I've got a pretty high target, $722 per share, 80% discounted. Because this cash flow that they've done historically, and they're providing this on their outlook. It's a lot of cash. If they can deliver on that cash, this is going to be a good stock. Earnings per share is good. I think healthcare has really been beaten up. And this one here, that's my price target on it. I'm building up a position. Why it's so discounted is simple. It's because the market has sold off healthcare so much, right? Like it was trading at 550 in August. It's down to 400 over the 5 year. It was tracking nicely. And then in 2024, it fell off a cliff, but it's the same company. They're actually bigger. They've been growing their top line revenue. The company's intact. There's nothing broken about the company. So I'm optimistic about Elevance, and I'm going to stick to it. And I'm going to keep buying shares. I think I bought some shares today. So I'm going to keep buying into it. Cool. You're buying a position in Elevance. Good luck. Good luck. Have I looked at HCA Healthcare? I don't think I have. HCA Healthcare is an American for-profit operator of healthcare facilities that was founded in 1968. Usually when I look at these guys, I don't like them because once you say they're running a hospital, man, it's expensive. So let me take a quick peek at it. Maybe I'll be wrong, but analysts think it's discounted by 16% over the 1 year. It's up 15.59, pays a small dividend. It had a big correction. Wow. Now, when we look at these guys, they're growing nicely, very nice growth. Free cash flow has been, I'm going to call it growing recently, but it was a little bit higher previously. Gross margins are pretty decent. I mean, this looks pretty good. I would say this company's worth $75 billion unless they have a bad debt problem. Let's see what their debt looks like. So they have $45 billion debt minus $2 billion, $43 billion of debt. EBITDA is 13.86. So they do have a balance sheet that doesn't get a passing grade. Their debt to EBITDA, well, actually, they're right there. 3. Yeah, they're fine. Their balance sheet has debt, but not a big problem. I think these guys are fairly priced at a market cap of 83 billion. I actually think they're priced a little too expensively just because the cash flow isn't great. They have some debt on the balance sheet that I'm going to have to claw out of the valuation that I put in there. So this one is not floating my boat. I'd rather be with an Elevance, because if you analyze Elevance, their growth is better, margins are better, cash flow is better. So thanks for asking. All right. So we looked at HCA. Thanks for asking about that. This is still Lamb Research, and this has their growth rates that look good. Okay. So let's talk about Tesla. Now, this one here is a little bit of a hard one to explain. Their earnings were not good, but their stock is up in after hours. Of course, it's Tesla. So let's net it out. This is a really nice page. Their automobile sales are down 8%. That's a majority of their revenue comes from automobile sales. A lot of investors believe they're not an automobile company. Oh, you know what? I'm in the way here. Okay, there we go. But majority of the revenues come from automobile sales. And then they have energy generation and storage. Okay. That grew quite nicely, but it's a small number. Overall, their revenues grew 2%. Gross profit dropped by 6%. So that's flat sales, and revenue or profit is going down. And when we look at free cash flow, it went down. So it's just not a good earnings. And car sales are not getting easier. It's getting harder. more competition in EVs. And that number, that top number, it's going to go down, in my opinion, because they are selling fewer units and they're having to discount their units. So that's just going to be hard. It's going to be really hard. But as it is with Tesla, they they're rallying. It's incredible. I think they're severely overpriced. I've said that for a while. Analysts think they're overpriced. I think they're severely overpriced, but these guys just say 22%. And this one here, it's incredible that the stock's rising. And of course, they talked about robotics. They talked about all these future businesses. And I guess that's what analysts or investors are like, yeah, hey, I want to buy the stock because in the future, when they do have robots, I'll be an investor. In the future, cool, good luck with that. That's not how I invest. The future to me is, show me the quarters that you just closed. If you can, have quantifiable metrics in the next 2 quarters, that's the future to me. A lot of things can change. Just ask OpenAI. 2 weeks ago, they were the cat's meow. Now they're completely under threat. You can have innovation. You can have cars come into the market that really, the consumer loves. And there's a lot of cool looking EVs that are non-Teslas. A lot of them. A lot of the brands are coming out strong with EVs. So we'll see what happens. And investors will continue to buy into Tesla based on the stories that they have. And of course, they have high influence in government now because Elon Musk was a big supporter of President Trump. Hey, credit to him. He supported the right guy, and he's probably going to have a lot of influence with that. So congratulations. I have a valuation of Tesla that's way below their current stock price. And it's not the first time I say that. And there's some stocks where I just don't believe in them. The market does. The market prices them differently. That's that. Hey, I don't get Tesla. It doesn't get me. That's fine. They don't produce free cash flow up to the level that I think they need to support their stock price. Oh, well. Their earnings per share is not that impressive. You have to hit it with a very high PE just to get close to where the stock price is. So if you look at the fundamentals, you cannot get to a valuation anywhere near Tesla stock. You have to pretty much close your eyes and use your imagination and visualize the company that they're going to be in 5 to 10 years. Well, I worked too hard for my money. I'd rather look at the financials of Meta and say, yeah, that's where I want to put my money. Those guys are making a lot of cash. They got a grasp on the future. They're getting it done. I'd rather invest in Meta than our friends at Tesla. So that is Tesla. Sabir 2. Can you take a look at HIMS? Tomas, what's up? Very nice to see you. I hope you're doing very well. Leon, good to see you. All right, let's take a look at HIMS. So did HIMS announce? No, February 24th. So HIMS, it's impressive what they've done. 261% rise. And they really do products that, are healthcare related. And in some cases, they're just like products that you would have bought. They're not necessarily prescribed products. And these guys, they have a telehealth platform. They connect you with a licensed professional who can help you get maybe some treatments, pharmaceuticals, and so forth that they sell. So you can get on that type of treatment. It's been a nice growth business. I believe they're growing really well. Growth is excellent. And profitability, free cash flow is now positive. Very good. And gross margins are excellent. Now, the thing that I find hard is, man, it's hard to project this, forecast it, because they just became cash positive. So, I mean, the valuation that I would want to have on this stock is like $3 billion, and they're way above that at $7 billion. So that's my apprehension with HIMS. Their cash flow isn't very high. I tip my hat to them. They're growing really nicely. They are selling product that customers want to buy. They're providing experiences that the market really wants. A lot of credit given to them for that. And based on earnings per share, they're they're growing their earnings per share in 25. Actually, they're contracting it a bit, and then they're going to grow it. I guess they're going to hit good scale in 26 and 27. But overall, I can't get to the stock price that they're selling at. Maybe part of it is that they've gone up so much in value that, yeah, this ship sailed, and it sailed without me. I caught a couple of really good winners, so no need to feel bad for me. I just didn't catch Hims. Hims was a really good winner. What's it going to do going forward? I don't know. I tell you that my valuation doesn't give the stock a lot of value, but it keeps cranking. Year to date, it's up 31%. Incredible. Looks really good. Nicely done, Hims. Yeah, the revenue is expanding. Very good. So this is a growth stock. And if you find growth stocks and you probably bought like a series of 10 stocks, you're probably going to do well. You're probably going to buy a couple dogs that crash and burn, but you're probably going to catch a couple that are like Hims or Robinhood or others, and they really go up in value. So those are my comments on Hims. All right, so we went over Hims. We talked about Tesla. This is an opinion just real quick on Tesla. This Jonathan Weber, he put out this opinion and thesis on Tesla. He was not impressed with the earnings announcement. Fundamentally, it's just the earnings do not substantiate the stock price. They don't. It's just, a company full of stories, a company that can really energize and excite the market. Good for them. Good for them. ServiceNow. Now, these guys were a high flying stock, up 48%. They've done really well. They really have ridden this whole AI story. They've really came out first and said, hey, we want to be an AI company. We want to be awesome at AI. And it looks like, and we'll take a look at what they announced. I'll look at their earnings because their revenue growth is good. 23%. That's a pretty tall number. But when we look at their free cash flow, 3.3 billion, that's pretty good. So 3.3 billion growing at 20%. I'd probably say this company's worth 70 to 80 billion dollars if they don't have any debt. And they're valued at 235 billion. So it's just really hard to value this company. They are not as big as Salesforce, but their market cap is like 60% of Salesforce, but Salesforce is close to more than 3 times bigger than they are. And Salesforce continues to grow. So it's like, well, why ServiceNow valued so high? I think it's because they really labeled themselves an AI company and the market bought it. The market totally bought it in 2022, 23, 24, and the stock has been bid up. Now the market's saying, hey, maybe we're going to sell you off because they heard something in the earnings announcement that they didn't like. Something wasn't growing. Or let's see here. So that's on Reuters. Let's see if they give me any good data here. Nah, it doesn't look good. Let me go to their investor page. Okay, so subscription revenues. So fourth quarter and full year 2024. So this is for the quarter. It went up 21%. Very good. Okay. So 21% revenue growth in the quarter. They're going to rebuy some shares. All right. So the revenue growth is still there. Now, the market's not liking something it saw. And I'm not seeing a guidance section to their earnings. While we're down here, so this is the fourth quarter. Hopefully they give us the annual. Here's for the full year. Their growth is at a 22% clip. Very good. Very good growth. Free cash flow increased by 31%. Very good. I still can't get to their valuation, but it's very good announcement. But the stock may be a little too priced too high because the stock's falling. Even though you had a good earnings, the stock's falling. Investors are beginning to double think like, hey, maybe we paid too much for this company. They're not as big as Salesforce. Salesforce, provides more cash. It's still grows. Salesforce is working as a stock too. So ServiceNow, I've never been an investor because I think it's just, especially recently, it's just been priced too high, and their fundamentals don't support the stock price that they have and the whole market cap. So congratulations to anybody who owns them. And another kind of data point, you have to pay a forward P of 73. That's really high. And that's a 20% growing company. I mean, Meta is growing at 20%. They have a PE of like 30. So why would I pay 73 for ServiceNow and they're growing at the same rate and they don't produce anywhere near the cash flow that Meta does? I'd rather buy more Meta stock or another company. So those are my comments on ServiceNow. They announced. We'll see where they trade tomorrow. They've been down for 2 consecutive days. Over the 5-day, they're holding their own. Incredible. They didn't back down too much. It looks like on Monday, these guys rallied when everything else was crashing and burning. On Monday, software companies did great. And they gave back some of their gains on Tuesday. And this one gave back some gains today. And it looks like it's going to give some gains up tomorrow. So that is ServiceNow. We mentioned ASML. They had a good earnings before the market opened, and then the market rewarded them with an increase of 4.29 on their stock price. And these guys were shellacked last time they announced. Man, look at this chart. And it looked like a good opportunity. It may be. Analysts think it's discounted by 36%. But when I look at the fundamentals, I think Lam Research looks a little better and a better investment for me. I can't argue with this being a good investment. It probably is. But I thought Lam Research was a little better, so I went with that one. This one here, I looked at their earnings. It was very good. They keep growing. See if they've been loaded. No, they haven't been loaded on the stock analysis page, but I did read through it, and it was a very good report. Very good report, and it shows that, hey, semiconductor is going to be okay. So I'm glad I'm buying into Qualcomm as a semiconductor company. Glad I'm buying into Lam Research as well. So ASML did quite well, and analysts think it's discounted by 36% because it's been just beat up. It's been beat up since it fell in the July timeframe. It's down substantially. It was above $1,000 per share, but now we're down at $712 per share. So hopefully ASML keeps working. They get their stock price back to where it was about a year ago. So that's ASML. All right, let's talk about Nvidia. This is a super interesting stock, man. They were down 4.1%. The after hours are down a little bit. What's this stock going to do? I don't know. It's man, this one here is it's really, I think it's going to keep selling off. The story with Microsoft and how Microsoft's selling off does not help Nvidia because Microsoft probably overspent on their data center CapEx, and they're being punished because their stock's getting hit. And that's probably going to reduce spend on these really expensive GPUs out of Nvidia. The story with DeepSeek, as well as now Alibaba AI, that, hey, we got better models than the ones put out by OpenAI that are less expensive to run. That's going to be a story. It's going to take a while. I don't know that we're going to get rid of that story. It may just be a fact that, hey, if you want to compete in the AI markets, you're going to have to match or come close to what DeepSeek can do and or Alibaba AI. If they can do it far cheaper, sorry, Charlie, businesses will go with the least cost provider. So we'll see how that plays out. But that whole story, it really ruins the narrative that was making Nvidia just fly to the moon. Because I was hearing stories of how everything was going to be digitized. Actually, not digitized, but AI was going to kind of be in everything. Oh, we're going to have all digital twins. We're going to have robots. We were going to have this. And we may still have it. And the good news is it's going to be less expensive. Your robot, instead of spending, I don't know, $100,000 for a robot, you're only going to have to spend 20. Big thanks to DeepSeek, sorry, or the other innovators who have just disrupted a cost model. And that disruption of the cost model is disrupting our friends in Nvidia. If anything, just removing the story that was just fueling the stock. So interesting to see where this stock's going to go. It's certainly paid investors a lot of rewards, but over the last 8 months, this is a stock where you haven't made any money. So if you invested on June 5th, which would be 8 months, you made 1%. So you underperformed the market in a big way. And in a month from now, if they go down even further, the 1 year compare is going to look worse. It's going to keep looking worse. And you see this volatility. This is fear in the market, because I'm not the only one that started to think this stock is going to look like a name that the dot-com bubble built out. Back in the day, this was the best networking company. When we were building the internet, networking gear was super important. And all the expectations were accurate. Cisco's going to be really busy. They have the best gear. They have the best product. Yes, yes, yes. But the market went crazy and they bid up the stock. And even though Cisco kept growing, the stock collapsed. And it's never made it back to that level. This seems to resemble our friends at Nvidia, who produce a great product, continue to grow, but the stock price just took off. And if you measure fundamentals, you're like, geez, these guys are priced to perfection. Well, perfection was lost a week ago. Now that you have competition and you have a change in AI, paths or strategies or architectures, it really ruins the whole narrative of, man, Nvidia is going to be incredible. It's going to be unstoppable. No, we've seen something similar in the past, and we'll see if they keep dropping. But it looks like the market is not willing to raise the stock price here. It's just sitting at around the same range with some volatility. Negative stories will continue to drive down the stock. And this is going to be a trail of tears in 2025, in my opinion. Diz, how are you, man? Good to see you. And Sergio, so it may be good for AMD because the chips are cheaper than Nvidia. It could be. If AMD is being used by like DeepSeek or Alibaba, it could be. But again, AMD, when I look at the company, they just, for some reason, they don't produce free cash flow. Their metrics are not very good. Their fundamentals are not very good. So for other reasons, I don't like AMD. they may be benefiting from the change in perception that, hey, it's Nvidia or nothing for AI. No, you can use less capable technology to get the AI outcomes you're looking for. So, and what has AMD done recently? So it had a good day. Year to date, it's down a bit. It looks like it's been getting hit. And in the 5-day, yeah, it's been hit. It's been hit with the others. Yeah, I'm not impressed with AMD. The one semiconductor stock that I'm buying is Qualcomm. Qualcomm has good fundamentals. What has it done over the 5-day? Over the 5-day, it hasn't lost any money. Year to date, it's up 12%. And this stock was really sold off. I think the fundamentals look really good. They're growing really nice. They're in iPhone. They're in a lot of mobile handsets. So I like Qualcomm. I like Qualcomm, and I keep buying their shares. So, okay, so we got AMD. Best performer has been Sprouts. Good for you, Sprouts. A high growth grocery company. And look at this return. Crazy, man. 207% from a grocery. These guys, they're more like a farmer's market. They have like premium foods and stuff, and people like it. These guys have been growing their revenues nicely. And man, who would have thunk? I'm in Kroger. I'm happy with Kroger, but man, you compare it to this rate of return, and this is awesome. Look at that, 892 in 5 years. Awesome. Congratulations. Nicely done. Good pick. And Sprouts, let me see if I can look at it. So Sprouts, the grocery business is not incredibly profitable, but these guys, they're doing a couple of things. They keep growing. That's good. And they're probably opening new stores. And their profitability, although if you compare them to a software company, it's not impressive. That margin is very good compared to like a Kroger or a pure play grocery retailer. That's a better margin. So I think that combination of growth and a better margin is really attracting investors. And it is a small cap. It's 15.5 billion even after this crazy move. Those are small caps for you. A lot of big numbers, it's going to be hard for them to have this rate of return, as I hope you can understand. But who knows? Maybe they will. This has been a super winner. Congratulations. 37 PE. That's a little steep to be paying for a grocery store. But I did look at Sprouts. I didn't think it was a good investment for me. Can't catch them all. I did catch a couple of real good winners, but not this one. Congratulations. Nicely done. So I'm waiting for a drop on Qualcomm to buy in. All right. Good luck with that. And Qualcomm was in the iPhone, but maybe they're out, and maybe it's the Android that I was thinking, the whole Snapdragon chip, and it's also in the Samsung. Samsung is Android. So I didn't buy Lyft yet. It's on my watch list. I'm still looking at it. I think it's a pretty good valuation stock. Let's take a look at Lyft really quick. Lyft has not gone up in value, but they have made what seems to be a good turn when it comes to their profitability. Let's take a look at this guy. So over the 1 year, they haven't really done much, right? 6.59, and year to date, 4%. Over the 5-year, not good, not good at all. And they're a $5.5 billion market cap company. Forward P is just 13. Now, when we look at their growth, it looks pretty darn good. 25%. Looks pretty good. Quarterly, 31%. Wait a second. Hold on a second. Stop the car. So they're growing at this rate. Their free cash flow is there. Margins are comparable to Uber. Uber is much bigger now, but this one looks pretty darn good. When I do a valuation on it, it looks pretty darn good. So I'm still deciding on it. I'm probably going to buy shares, especially now that I'm going to sell Microsoft. I have a few bucks to spend. Maybe tomorrow I'll switch horses. I'll switch Microsoft for Lyft because this just looks really good. Be nice to see this sucker bounce back to maybe up to a $10 billion market cap and reward stockholders. So I'm still looking at it. Still looks good. And look, it had a down day, had a down day. So it's having a down evening, I should say. They're going to announce on February 11th. So that's in 2 weeks, call it. So this still looks good to me. Yeah. Thanks for asking. I've never heard of Sprouts. I'll have to do some research on that company. Yeah. And if they're in a city near you, check it out. They have, it's not like a boring grocery store. Like, I own Kroger, so I'll make fun of that. They have like a typical grocery store, but Sprouts is different. You go in there and they have all these healthy foods and they have prepared foods, very different presentation. So I think people like that. They're like, hey, I can go in there and get some good food. And I don't think people shop at Sprouts in volume. They're more specialty foods. Like they go buy a few items, probably get their volume at Costco or another grocery store like Kroger. All right. So congratulations again on Sprouts. We'll see how the Nvidia stock performs, but it's just been hammered. Progressive, it did okay today. They announced their earnings. It was red for a while. The one thing I would say is these guys already had a tremendous year and a tremendous 5-year. So the stock is priced quite high compared to Allstate or Chubb. I like Chubb. Chubb was up nicely today. And these guys, they still have a reasonable PE. But when I look at all the fundamentals, I think Chubb is the best bet for me. And that's where I'm buying into is CB Chubb. And Chubb did well today. It was up 1.31. It was up higher earlier. So I like the fact that this stock hasn't been bid up, but their fundamentals are excellent. And the CEO came on record and said that in 2024, that was their best record and their best performance, most profitable in their history. So the fundamentals are there for the business. So I really like what I get out of Chubb. And I think this stock is going to be a good addition to my portfolio. I'll keep adding shares every chance I get. Sabir, can you compare Sprouts to BJ's? Yeah, 1 second. So Chubb's my stock versus Progressive, but Progressive has done really well over the last couple of years. So congratulations to anybody who owns Progressive. And it's been a good rewarding stock. So BJS. So Sprouts, if these guys are a wholesale club, it's a different, I think they're trying to serve a different clientele, but they're both into groceries. These guys are doing well, 52%. Look at that. These guys, I guess, I'm going to guess they're a small Costco. Yeah. Wow. Looks good. PE is 24. I think, so here's Sprouts. So Sprouts has a much higher PE. BJ's has a lower PE. That looks good. They're priced a little expensively, according to analysts. And the stock has been really performing. So awesome. It's a small cap, 13 billion. Man, these are good looking stocks. Growing at 5%. Sprouts had a nicer growth rate. These guys are pretty good size. Their margins, gross margins are like substantially less than Sprouts. Sprouts was like 30 something, right? These guys are 18. Remember the comment I made around grocery? Grocery has low margins, and these guys are showing low margins. These are gross margins. You still have to pay for your corporate staffs and all kinds of stuff too. So your net income ends up being quite low. Not my favorite place to invest. I don't spend a lot of time within grocery retail. Maybe I should when it's, returning this kind of rate of return. So, congrats if you've been in the stock. Either one would have just delivered great returns. Awesome. I think they've both been really good winners. In some ways, BJ's looks a little better based on PE, but on margins, Sprouts looks better, and on revenue growth, Sprouts looks better. So, do your homework on them and good luck. I think it's one or the other. It's hard to pick one or the other, and it's not an industry that I spend a ton of time in. I just bought Kroger a long time ago. It's there. It doubles in value every 5 years. Done. And then it's a good diversification play for me. So that way I can play around with Coinbase and Robinhood and these aggressive growth stocks in healthcare and so forth that are smaller caps. All right. So that's BJ's. Good one. All right. So Mitch S. Investing in companies where the workers act like they are in a cult. Yeah, okay. And then they really love their jobs and they really stick up for each other and they all want to, do a great job because they feel like they're a part of something. Yeah, it makes sense. I know the CEO of Starbucks was talking about that he's trying to bring back some culture that the actual, they call them partners, but that's the employees. The employees were asking, hey, let's go back to some of the things we used to do because it would kind of make us feel like we were part of something that was cool. So he's bringing some of those things back. So he probably is picking up some of what you're dealing here in getting employees to feel like they're part of a cult or part of something special. Can you check ATD stock? So ATD. So this is a grocery store, similar to the ones we were looking at, convenience stores. Okay. Hasn't done well over the 1 year, but it pretty decent over the 5 year. Nice upward slope. Look at that. Nice. 1% dividend, 17% PE. And they're growing nicely over the 12-month, trailing 12 months. They've been a little bit cyclical. Grow, slow down, grow, slow down. That's a little unusual for like grocery or I guess convenience in this case here because I mean it's not like people stop eating. No, they need to keep getting food. But it has been cyclical. The free cash flow is 2.6 billion, gross margin is 17. This is more like BJ's. So the recent growth looks good. They just price pretty expensively. All these three stocks, it's hard for me to buy them because when you compare them to like high growth tech, high growth biotech, high growth, communication services, those stocks to me just look more attractive and they have more potential. It's hard for me to imagine that, oh, this grocery store is going to be 10 times bigger in the future. They're competing. They have a lot of competition. Grocery, that industry has been around forever. So that's one of the things that, I'm not in love with the grocery business and I don't spend a lot of time in it. I don't believe in it that much. So that's why I stay out of it. Now, the investors that have believed in Sprouts and BJ's have done really well. So I'm not saying that, hey, if you get grocery and you're good at it, go for it. Knock yourself out. Invest in stuff that you can understand. So thanks for asking about ATD. Autodesk. Software companies have been cleaning up. Let's see if Autodesk has been cleaning up. So Autodesk, 1 year up 20%. That's decent. Over the 5 year, up 52%. Also decent. They had a big pullback here in 22 along with everybody. It hasn't run up as a stock, very much. It's a $65 billion company. Revenue is about 6 billion. Forward P is a little high at 34. Let's see what their growth looks like. Analysts think it's a buy with a small discount. They're growing at 11%, $5.5 billion company. Okay. And their growth has been consistent. Autodesk, they help in the design aspects of products. So if you're designing something, you can do it in their 3D design, engineering, entertainment technology solutions. So that's what they do. I'm familiar with the company. They've been around for a long time, and they're a leader in their space. So the revenue growth has been good. Their margins are probably very good because they're a software company. Gross margins of 91.98, 92% gross margins. That's really good. Free cash flow, 1.3 billion. It's a little lower. It's been a little higher in the past, but they're growing. I mean, this company's worth 30 billion if they don't have too much debt. Yeah, they don't have too much debt. So it's like a $30 billion market cap company. Yeah, they're way above that. It's hard for me to pay up for that. I bought into DocuSign at the right time, made good money. I'm bought into Zoom. It's really going up. And I think Zoom provides a really good proposition. This one seems a little expensive. Their cash flow is low. I wonder why. Why is their cash flow so low when their margins are so darn high? Let's take a closer look. So their net income is here. Maybe their gross margin, that wouldn't have R&D. Maybe the R&D investment that they have to put into their product is so high that it's hard for them to let that cash kind of flow through the statement of cash flows. So general and administrative is pretty high. That's a pretty high number. And then research and development is pretty high. So their operating expense in all this section, it seems like they're being wasteful. Because if they have very, very high margins, why are they like wasting so much money? They should be far more profitable. And that's why their cash flow is low. But historically, see here, cash from operations. So here's a free cash flow. Historically, they haven't been a very high cash flow producing company. You want this number, I want it to go up. I don't want it to be like plateau and just stay there. The reason Meta is so freaking valuable, or other companies like Meta, is when you look at their cash flow, it has a upward trajectory and it's really shown growth. You see that growth? They went from a very small number of 5.5 billion. Now they're doing 52 billion. And that keeps ramping up. It's going up. That's why this stock's worth $1.7 trillion is they showed that growth. When we go to Autodesk, they don't have that growth. They're just flat. These guys are pretty much like, okay, then they're going to stay at this cash flow level. My multiple on it isn't going to be very good. So I can't get a very high valuation for Autodesk. So it's a pass for me. I've looked at it in over time and has never really made sense for me. And I just don't like the statement of cash flow on that. All right. So it looks like Autodesk is moving customers to subscription model. That makes sense. That makes a lot of sense. SaaS. Yeah, that makes sense. DDA. Cool. So you're asking about Autodesk. All right, guys, we're 20 strong on the live stream. Thanks so much for joining. Appreciate it. Let's take a quick peek and see what the future looks like. It's up a little bit. That's cool. What's Asia doing? So Asia looks like, I think this is this Shanghai? Yeah. But I think they're closed for their new year. Yeah, this is January 28th. So I think they closed for their New Year or the Chinese New Year. All right. What other headlines are out there? Nothing. So the futures are supposed to go up a little bit. That's cool. I'll take it. All right. So once students learn to use Autodesk, they won't want another. Yeah, I agree with that. It's just they didn't grow their cash flow. And I showed you like if you want to increase the valuation of your company, grow that cash flow. Show that you have established scale and now you're just, we invest in companies so they can return our capital in the form of stock buybacks, the stock's appreciating. You can pull your initial investment out of that stock price. And if companies can't produce free cash flow, to me, that's a signal it's not a valuable business. The most valuable businesses produce free cash flow. It is it's a metric that's been used for 100 years, and that's not an exaggeration. If you look at Benjamin Graham's book, he used free cash flow. Warren Buffett, free cash flow. More recently, if you look at investors like myself, long-term investors, you look at free cash flow. You establish the value of that company based on how much cash they can produce. Very simple uh, acid test for a company to make sure, hey, that business is worth it. That business is totally worth it. All right, everybody. So thanks for joining. We're 21 strong on the live stream. Um, Question for you: Who out there's looked at DeepSeek and really used it? I know we had comments yesterday. There was one user who uses it. He thought it was as good as ChatGPT. I haven't tried it yet. I haven't set it up for myself. I wanted to try it, but a lot of people have been trying this thing, and a lot of experts, and they're very impressed. It does really well in most of the tests that it's put up against all the other models. So here's ChatGPT and how it ranks. And I don't know what you guys have been seeing with AI, but AI, you know, for me, I'm not adopting it like for most of my work or anything. It's just something that's neat, right? I try it once in a while and, maybe once in a while I ask it a question. And I'm sure some students are using it maybe to get a good handle on a subject. Totally understand that. But I don't think it's like everywhere. And it hasn't changed my work life. It hasn't changed my personal life. It hasn't changed my family. I think my son, who's in college, he probably uses ChatGPT the most. He does think it is helpful, but he also uses Chegg or yeah, Chegg. So he's using both those apps, to finish his undergraduate. So people are using it, but I don't think it's being used as much as people thought it was going to be used, or at least the visionaries said, "Oh man, we're all going to be using AI all the time." I don't think that's been the case. DDA hasn't changed my work life either. Yeah, I mean, it's I think eventually AI will be something really interesting. It's just a matter of time, right? But we're investors, right? We don't invest, you know, and wait around 20 years for something to happen. No, we invest when the investing is right, when investing is right, when we see businesses grow, when we see businesses profit, generate free cash, take over market share, all those things we see them, we invest, and that causes a rally in the stock. If you're investing in a stock and having to wait around, that is really risky and probably going to be a road to losing money, because a lot of those companies are going to surprise investors and surprise them and say, whoops, our idea didn't work. And that's why we weren't growing, because our competition has a better idea, or the market doesn't really care about our product. And those are big losses. So that is that. All right. So let's talk about, and please add, if you want me to look at a stock, pop it in here. I'm trying to see if there's any other stock request. Please pop them in there. But while I wait for that, let's take a look at some sectors. So the sectors that I think have a good chance of doing well is healthcare. I think this has been beat up for 2 years. So the valuations are really low. The PEs are really low. And as you see a rotation of money coming out of Nvidia, coming out of Microsoft, it's flowing into healthcare. Communication services has been just cleaning up for the last 2.5 years. So not sure it's going to keep cranking the way it has, but it's going to be okay in 2025. Financials, they had a great 2024, and they're probably going to have a very good 2025 and 2026 because now you have an administration that's going to make their lives a lot easier with less regulation. So financials look good, healthcare look good, industrials look okay. I don't think the economy is doing great, but it's doing okay. And I stay away from consumer staples because it only does well when things are bad. And all other times it underperforms. So no thanks. I'll just buy bonds. So that's going on there. Consumer discretionary, you got to pick your stocks there, but it's been doing really well in 2024. It did great. Picking the right stocks is key there. And I don't know what's going to happen with Apple. Apple's going to announce tomorrow. And man, they caught a break. I thought Apple was going to be the one company that was going to be criticized the most this week. I was wrong. The whole narrative changed once DeepSeek came out and changed the whole AI universe. All of a sudden, it's like nobody really wants to talk about Apple because a couple stocks and a couple industries have been lit on fire and they're burning down now. So I think Apple's going to make it through the week without having to answer big, tough questions because they didn't act on AI, and that probably was uh, either a lucky move or a really smart move or both. They were smart enough not to overinvest too early because who knows who's going to be the winner, who's going to be the killer technology. And OpenAI seemed to be in the lead for a couple years. Well, now they may have been leapfrogged. The whole paradigm may have shifted. Hey, companies aren't going to pay a ton of money for AI large language models. They'd rather get the nice, affordable one from uh, DeepSeek and start building from there and avoid the OpenAI one. So Apple kind of looks like, you know, they really were doing the right thing. So at my work, so Pedro, at my work, Microsoft Copilot auto generates code very effectively, in my opinion. I don't know what Microsoft can do. Cool. So that's impressive that it can write code. So Carlos, crazy to me that Starbucks was up 8%. You know, that CEO is pretty popular because their earnings were not good. Their revenue was not good. The revenue growth. I think this is most recent. Here it is. So the revenue was flat, and that's 4 quarters of negative revenue. So that's bad. And when we look at free cash flow is okay, and gross margins 26%. Sprouts is better than that, and they don't have to make any coffee. So fundamentally, this business is overpriced. I owned Starbucks. I thought it was a good pickup here. I bought it. It cranked up with the new CEO. I sold it at a nice gain. Thank you very much. And I don't regret it. It's been rallying of late because it's a expectation that the business is gonna keep improving. But I don't think Starbucks is a very valuable business. It's a good business. It's a very popular business, but it's a $123 billion company, right? The businesses that are going to go up to a trillion or really become really valuable are intellectual property driven software companies, Meta, Google Alphabet, biotech. If a very smart pharmaceutical like Eli Lilly, they create pharmaceuticals that people need, that's IP, and they really grow to really great heights, and the valuation of those companies goes through the roof because they make so much money and they keep growing and they deliver that free cash flow and put it on the balance sheet. So Starbucks, they had a good day, but I'm not excited about the Starbucks stock. I thought it was an opportunity. I took it, made some money, cashed it in, and moved on. A win is a win. So I agree with you that, it was up today. It's probably mainly because the CEO is really well liked, and I think he's impressive. Good for him. So Michael Anthony, why did LC sell off on earnings BS? All right, so let's see here. Lending Club. So these guys do kind of like sharing economy, peer-to-peer lending. So people seek capital and then investors will invest into the company. Very small cap. You're paying 1 times revenue, pretty 1.5 times revenue. And strong buy according to analysts, low PE. Revenue growth, not very much. So they just haven't grown much. They were growing really fast here because they collapsed. So this has been kind of a spotty business, hasn't grown very well. They dropped 14%. Ouch. And that includes the quarter they just closed. Look at that, man. They grew by 20%. They weren't very profitable. So interest expense. Oh, 98 million. What's going on here? So do they have a lot of debt? So they're not showing any debt there. So something was charged on interest expense. So do they have long-term debt? They had it before. What are they paying interest on? I don't get it. They don't have any debt. Unexplainable how they have a big interest expense number driving down their profitability, but the market did not like something in their earnings and it sold off. This is a really, really small cap. It's done well for the year, even though it really crashed today. It's done well for the 5-year, not so much. So the fundamentals don't look great. They kind of are peaks and valleys, and that always is hard to get my confidence up. If you have nice, smooth numbers, my confidence goes up. If you have numbers that are unpredictable, hey, you went up, 20%. Oh, you crashed down 50%. And then the next year you went up 5%. It's like, what's going to happen next? It's completely random. I don't like that. I would rather like to see smooth numbers, and I don't think I'm unique in that request. DDA, NBIS, Nebius Group operates a technology company that engages in building full stack infrastructure to service the global AI industry. Its businesses include Nebius, an AI-centric cloud platform built for intensive AI workloads. Okay. And this is a new business. We looked at this in the last 2 weeks. It looks like they were cranking up, but man, let's look at the 5-day. So in the 5-day, they're down 25%. So they have really sold off because, again, the story on, are we going to need these super advanced data centers that are going to take on these massive workloads? Well, if DeepSeek is doing it on a fraction of the technology scale that OpenAI was doing it on, the answer is no. I'm sure there'll still be demand for really accelerated high performance computing for certain types of workloads. But for the general AI workload, DeepSeek has proven not a necessity anymore. And now Alibaba AI is coming out saying we're even better. And that DeepSeek idea is catching fire. I've heard that in the Silicon Valley, a bunch of startups are already developing on it. DeepSeek was launched on, or was released on Christmas Day, December 25th. It caught some attention at Davos last week, and it was being evaluated, tested by technologists and some very reputable ones, and they started forming opinions, positive ones. And these are like really credible people that are making the comments. It's not like Joe Schmo that nobody knows about. No, these are really credible people that are putting their name on the line saying, I tested it and it's the real deal. Having said that, the story has really changed. So Nebius, 18% growth, revenue is pretty good. They're making money. No, they're losing money. They're burning cash in the most recent years. So that's a problem. Gross margins are good. So this is a new company. It's going to be risky because they're new. And most IPOs, they usually have a pretty good correction. Like they sell off for a while, then they start building back up. Once they have good financials and more investors are confident about them, then they start to rise. In this case here, this one's really new. Obviously, an investor that bought way up here at $37 a share is not feeling good because it fell off a cliff. And I don't know that it's going to regain that value very quickly. The whole story in AI has changed. And until somebody proves that, DeepSeek and other solutions are not going to be useful, because right now the momentum's building that, no, that's the new path. The new path is use DeepSeek and like models because that's far less expensive. We don't want to spend a bunch of money building out AI. We want to spend the least amount. So that's, startups are already blazing that trail. And I think a lot of other companies are going to follow. All right. So that's NBIS. Thanks for asking. So you guys in the US have Starbucks drink with lavender. I don't know. Never had it. All right. So Michael Anthony, why did HLF been selling off? Last quarter earnings doubled. Herbalife. Okay, this is a business that it's a, what do they call it? Multi-level marketing business where they have independent reps selling. This is like a health supplement. And it's not a very popular business. The forward P is 3. these guys are destined to not exist anymore. And the product the brand will probably be sold, and it's sold to some food company that'll probably put it on the shelf somewhere. But they're down to 581 million in market cap. The PE tells you that investors don't want in on this business. They've been losing sales. Um, they've been flat sales and then losing a little bit. Free cash flow is good, but it's just an undesirable business. This business was shorted by Bill Ackman some time ago, like 10, 20 years ago. And it just hasn't been a business that investors want to buy into. It's, I mean, they were like at $50 a share in 21. And now look at that. Holy smokes. That is a big drop. Interesting. I wouldn't touch it because I don't really believe in their product. I think it's a bunch of sugar water that they charge money for. But that's me. I don't understand their business, and I'll stay out of it. All right. So I don't understand why markets sell off because Powell didn't cut rates. Sounds like fax machine business. Spear. Okay. So I think that, again, Powell, the Fed, their comments were nowhere near the magnitude of what's going on in AI. What the AI story for the last 2 years has been driving so much wealth creation. Some of these stocks are just going through the roof. Nvidia, super microcomputer. I mean, there's probably like 40 stocks that just were cranking up. Broadcom. And on Monday, over $1 trillion of value left AI stocks. That's a lot. And there's a lot more that's going to leave. So the biggest story is how big will it, or how steep will the crash be in those AI stocks? Will it stop? Will it rise? I mean, that's got everybody on the edge. So the Fed talking about, oh, we're going to move interest rates a quarter of a point, or we're not going to move them a quarter of a point. Whatever. I didn't care. It's like, you could have moved interest rates. I don't care. The biggest story is this, is the AI paradigm, has it changed? Are we going to see faster innovation of AI because now it's a lot cheaper? So you don't have to be a startup that has $100 billion of seed money to get started on AI. No, you could be a company with 500 grand of money, get the DeepSeek model loaded on some reasonable hardware, and you're off to the races developing. That's why people are really excited about that solution, because DeepSeek runs on really inexpensive hardware. And the whole data center story was, we're going to have to run premium software, high performance hardware for this thing to work. Well, that story's kind of being thrown out. It's now going to be, no, if we have a way of running, very commodity based hardware at a very low price, that's the path. That is the path to take. So it's exciting to see that happen. Overall, consumers win, mankind wins, because AI is going to be developed faster. But the premium hardware companies, the premium semiconductor companies, they lose because they love charging $30,000, $60,000 for a GPU. But now it's like, we don't need the GPUs anymore. Okay, who are we going to sell these GPUs to? I don't know. But the demand forecast just collapsed. So that was more important than Powell. Who cares if we're going to move interest rates a quarter of a point, in my opinion. So yeah, now it is far cheaper for a company to incorporate AI into their products or build an AI app on top of the deep seek models. Because if you think about before, maybe you had to put 10 million to build an app on OpenAI. Now you can literally put like, I'm imagining like 25,000 or something, just a fraction of what it used to cost. And more importantly, when you run GPUs, you consume electricity at a very high rate. And what DeepSeek has been proving is they don't consume nearly the power that the OpenAI models consume. Big game changer, huge game changer. So they'll be less expensive to build, less expensive to operate. What's there not to like? And the model has been delivering the answers and in a very effective way. Again, it's being tested by a number of people. The thing is legit. So that was the biggest story this week. Right. 32 strong, man. We're growing in strength. This live stream is growing in strength. So what would you guys like me to talk about? We got 32 people. Give me a topic. Give me a stock. Let's figure out how to make some money. I'm doing well in the month of January. Nuclear stocks are tanking. You got it. Let's talk about that for a sec. I can talk about utilities because I hate utilities. I don't like utilities. I've avoided utilities because they're terrible investments and they caught a lot of momentum. But let me show you the year to date. What's my number one stock to Vistra? So Vistra has been booming. And I'm going to show you the fundamentals on it after I show you the stock chart. So Vistra was on a trajectory from a stock perspective that, man, they are going to be so valuable. Look at the stock chart. Incredible. They're going to be so valuable. They went up in value from $22 a share. I guess you could say 7 times from this point, and that's after they collapsed, right? 20%. One day they collapsed like 28%, 30%, excuse me. What a fall, huh? Well, when we look at this stock, you think, well, they must be, growing their revenue like crazy. Nope. 4%. It's like, well, what's all the excitement about? 4% growth. Well, their margins must be spectacular. Nope. No spectacular margins. Their margins are 11%. Unspectacular. Free cash flow, unspectacular. Everything's unspectacular except for the stock. The stock is spectacular. Well, at some point, you got to measure the company by how much money they make and how much cash they produce. And in the case of these guys, they're maybe worth 10 billion, in my opinion, maybe on a good day. Part of what I dislike about energy companies is that they have to put so much capital expense back into the business ongoing. So here's their capital expense. They have to put so much capital back into the business. It takes away that cash. If you look at Meta, Apple, Google Alphabet, they don't have to put any capital back in the business. They get to keep all that cash, put it on the balance sheet, acquire other businesses, buy shares, just grow their balance sheet. You look at the cash balance with Apple, they have well over $100 billion of cash. So utilities just are an undesirable business to begin with. So when these guys were just cranking through the roof, I'm like, this is insane. I'm currently shorting Vistra, and my short position is in the green because it started to collapse. We'll see where it goes. I think this stock in 2025, I would not be surprised if it's down to $50 per share. It'll be very, very painful. But where's the power going to go now if there was an innovation where AI is not going to consume the power that was forecasted? Vistra was sold on a story. the story's gone. If the story's removed, you don't have the fundamentals to prop up that stock price, in my opinion. So I think the power companies and the nuclear companies, to build a nuclear plant takes a long time, like 5, 10, 20 years. And yeah, people are like, oh, yeah, let's buy this nuclear power company because they're going to build these power plants in 10 years, 20 years. Really? Now that we don't need the power, what do you have? Nothing. Just a story, in my opinion. So it's funny how the situation's kind of changing very quickly. And we'll see how it goes. DDA TPL. So TPL is Texas Pacific Land Corporation. Engages in the land and resource management, water services, operations, business. Okay. So this is $29 billion company revenue. Strong buy, but it's priced really high. Up 156%. So what do these guys do? So they own land and the resources on the land, including water. They're classified as an oil and gas exploration company. So revenue is 686. So they have been growing. Very high margins. I think they sell the rights to explore their lands and they don't have to do much for it. So that's why their margins are so high. Free cash flow 454. Yeah, I can't get to this number, but I can get to like 10, maybe 15 billion. They shouldn't have much debt because they don't have much operations. Yeah. Yeah. This seems like it seems overpriced, or I'm not understanding why it's worth 29 billion, because they only produce like $633 million of free cash flow, and they're not a high growth company. They're just growing okay. Some years they grow really fast, but they were negative in 23 and single digit growth now. Yeah, I'm not seeing metrics, fundamentals that bring the value up to 30 billion. So good luck with that. So Teva Pharmaceutical, I think, did they have a good day? No, they had a bad day. Whew. Man. Horrible day, down 14%. So when they announced a decrease in revenue, and it surprised everyone because they were growing. Bam, decrease in revenue. Okay, that'll cause that drop. So that was a big surprise. And when we look at and they lost money. So the revenue went down, they lost money. Yeah, 14% down. Free cash flow was there, kind of. Gross margin got a little better. Yeah, especially if they surprised the market and they weren't guiding that, hey, our revenue is going to be lower, kind of give everybody a warning. And they just show up and say, sorry, our revenue went down, hammered. And for good reason. And it'll take a while for this stock to probably come back. Hammered. Interesting chart. Like they were kind of creeping up and then they cranked up. some story caused them to go from 16 a share up to 22. And now they're back to 18.50. $81 looks good. But when they started their rise in October of 23, very nice rise. I mean, a great performer from $8 to $20. So you doubled your money and then some. But that if you start losing sales, that means the business, there's something wrong with the business. This means you're losing customers. They're not buying as much stuff. Your prices are being reduced. This is not a good situation. If this is a beginning of a trend, this is a bad situation. This is a one-time deal. This is bad management. They could have warned everybody a little better. They could have adjusted and worked their way through that issue. So yeah, it crumbled down because of loss of revenue. And DocuSign company. DocuSign was down, but I think they're having a good week. They were up big, I think on Monday. They were down 2.29%, but they had a really nice Monday. Look at that. Every Monday should be like that. I'm all for it because I'm a stockholder. They went up like 6-7% on Monday, and they gave up some of those gains, but they're still good. For the 5-day, they're up 4%. Year to date, 6%. The 1 year, 52%. I'm good. DocuSign's good. They have good fundamentals. They're growing, super profitable, high cash flow. All those things are there. High cash flow, growing cash flow. Remember how I talked about upward chart, growing a free cash flow, nice fat margins, 80%. Nice profitable company, intellectual property based company, growing their top line revenue, growing their cash flow, high margins. Beautiful. DocuSign is good. And they are an acquisition target. Big giant company can come in and say, hey, we'll buy you. We'll offer $35 billion for the shares that are outstanding. And stockholders will make out like bandits. Thank you very much for that premium. So we'll see if that happens. I think it's going to start happening because acquisitions are going to increase now that you have Donald Trump in the White House. All right, everybody. It is awesome that we're 26 strong. This was an awesome live stream. I appreciate you guys tuning in and attending my live stream. Any other requests before I shut it down? I gotta go have dinner. I gotta go eat some food, man. I've been on it all day. It's been a great day. I was up today. I was up and the market was down. So it's a very good day when I can dodge bullets. Market was down. I was up. I'm up during January. I'm beating the market in January. It's very good. So cake. Are we going to talk about Cheesecake Factory? We looked at the stock the other day. I'm not a big restaurant guy, right? Like stock. I eat at restaurants. I love restaurants, but I don't like investing in restaurants. Just very expensive. These guys are getting it done for the 1 year, not so much for the 5-year. Boy, they really went up during COVID, I guess. Then they came back down. P of 15 looks good. Decent dividend. They're going to announce on the 19th. Slow growth, especially more recently. They only had one negative quarter. That's not bad. They're kind of working the way out of it. Not bad at all. So single digit, low single digit. This growth rate was phenomenal because they, I think, had a collapse during COVID. Nobody can go into the restaurants, and then they had really nice growth. All right. We look at free cash flow, not too good. Not good at all. There's no upward chart there, right? So I can only expect that maybe they'll do 100 million in free cash flow, and they won't be able to grow it much. 41% margins. And based on that expectation, I'll pass. It's not exciting. I don't get it. It's 2.75 billion. Maybe it goes up to 3 billion, but I'm trying to find stocks in industries that I'm really excited about, and owning restaurants is not one of them. These are nice, good old school businesses. If you get these and you make money at these, go for it. It doesn't matter whether you make money on Cheesecake Factory or Meta. It doesn't matter. The money spends the same. So if you get restaurants, go for it. Total respect. You make money the way you want to make, the way you can make money on industries you understand, on businesses you understand. I don't like restaurants. I don't invest in them, but this one looks pretty damn good for the last 5 years. Decent. Last 1 year, excellent. PE looks okay. Their growth looks okay, but when we get to free cash flow, it's like very spotty. I don't like that. And if we look at their debt, do they have much debt? They have 1.89 billion of debt. Debt to EBITDA is a little high, 3.64. So debt is high, but that's a symptom of not producing a lot of cash flow. And probably because they have retail, they have to recondition these places and put a lot of CapEx back into the business. So I don't like that. It's better if the business doesn't have any capital expense and you get to keep all that cash on the balance sheet and do something with it, like acquire businesses. So Sergio, so that was cake. So Sergio, Teva, we went over Teva. They surprised on revenue. They missed a revenue target, or they had a contraction in revenue, which is bad. So looks like we got some Portuguese out there. Now I speak Spanish and read Spanish, but I do not read Portuguese. Cool stuff, man. All right, guys. Well, I'm going to shut it down, going 2 hours, and I'm getting tired. I'm getting hungry. So I'm going to wish you guys a very good night. And I want to thank you for attending the live stream. It was a good one. And we got more action coming. We've got a pretty active day tomorrow where we are going to see after the close, Apple and Visa are going to announce. Before the market opens, MasterCard, Blackstone, Thermo Fisher, which is they do like med devices and stuff. They're going to announce. Caterpillar, Comcast, United Parcel Service. So there's going to be a lot of action. Not quite as like this afternoon was huge. 3 huge companies. Tomorrow morning, we'll have one huge company. We'll see what they announce. And I will track it. It'll be an interesting live stream. I'll live stream at the same time, 8 p.m. Eastern and 5 p.m. Pacific. I don't think Apple's going to sell off, Carlos. And the reason for it is I think, again, that big story is AI just kind of got all mixed up. And who's going to win or lose? Well, luckily, Apple's like, well, we're not going to lose any big investment because we didn't make a big investment. And whoever ends up being the winner, we'll partner with that company. So they're not in a bad position right now. And I think they're going to be able to get through this earnings without being punished. Even if they show up with no growth again, they'll probably just skate by and show their profitability and say, hey, we're just going to keep making money. We're not going to grow. We're not going to be exciting. We don't have any new product coming out. Oh, well. And investors would be like, well, that's not bad because Nvidia is kind of on fire. It keeps going down, as well as some other AI related stocks that were driven in the data center. So maybe not growing, but being profitable isn't a bad thing. So I think Apple will have a pass tomorrow. All right. But join me tomorrow. We'll see what the earnings do and what the aftermarket number looks like. And then together we'll be like, whoa, you know, the market surprises. Like today, Tesla, right? Tesla's business is like under threat, but their stock goes up on a day that they announced that because the CEO says, oh yeah, in the future, we're going to have robo-taxi and we're going to have robots and we're going to do all these cool things. For now, we are struggling with our car business, but don't pay attention to that. And buenas noches, Carlos. It was a pleasure to have you guys. And I hope you guys have a good night. Good luck with your stocks this week. All right, everybody. Take care.